India's neighboring country of China is going through a rough phase, with Evergrande Group becoming the victim of a common Chinese problem of debt burden and tight liquidity. The company threatens to crash the market of China. While the company continues to bleed, the Xi Jinping regime is nowhere to be seen. Akin to Evergrande, the current Modi government had a similar scare in 2018 when the collapse of Infrastructure Leasing and Financial Services Limited, or IL&FS, threatened to upend the Indian economy. However, the government quickly jumped in and appointed a board led by Uday Kotak to lead the debt-ridden company and bring it back on track. And 3 years down the line, according to Uday Kotak, over 61% of the outstanding debt has been settled by the board, a monumental achievement, considering the odds were highly stacked against the company and the government. Hi and welcome. You're watching TFI English, the national socio-political analysis arm of the TFI Media Group. I'm your host, Atul Mishra. And in this video, I will tell you how a government panel led by Uday Kotak solved the IL&FS debt crisis. Let's begin. Government of India on Wednesday, that is September the 22nd, extended the term of Uday Kotak, chairman of Kotak Mahindra Bank, as the non-executive chairman of debt-ridden Infrastructure Leasing and Financial Services Limited, Group by another 6 months. Uday's tenure was supposed to end on October 2nd, but the government, through a Gazette notification, extended the tenure. Kotak's extension comes a day after he talked about Chinese company Evergrande and how it reminded him of the IL&FS crisis. In the tweet, Kotak remarked that a 61% recovery of the outstanding debt had been observed at IL&FS. Uday Kotak tweeted, "Evergrande seems like China's Lehman movement. Indian government acted swiftly, provided calm to financial markets. The government-appointed board estimates 61% recovery at IL&FS. Evergrande bonds in China trading close to 25 cents to a dollar." Kotak's extension is indeed laudable, as he is undertaking what is undoubtedly a difficult, underappreciated and thankless task. IL&FS at one time threatened to be India's Lehman movement, capable of triggering a collapse in the economy. However, the Modi government, with its all hands-on-the-deck approach, quickly assessed the gravity of the crisis and jumped in with its resources. Uday Kotak was appointed by the government as the head of the leaders board, which also included Tech Mahindra Vice Chairman, Managing Director and CEO Vineet Nayyar, former SEBI Chief G.N. Bajpai, former ICICI Bank Chairman G.C. Chaturvedi, former IS officers Malini Shankar and Nand Kishore in 2018 to help the troubled company wade through the rough waters. Reportedly, under his tenure, the center-appointed board discovered that there was a complex web of over 250 companies that were part of the overall IL&FS group. Over 90% of the flagship companies' assets were classified as a dud. IL&FS is a non-banking financial company, or shadow bank, that was founded in 1987 with equity from Central Bank of India, Unit Trust of India and HDFC to fund infrastructure projects, when peers IDBI and ICICI were focused more on corporate projects. For a layman, shadow bank is a term used to refer to intermediaries in the banking and finance segment that provide similar services as that of traditional banks. However, they are not under similar regulation. IL&FS's major shareholders include Life Insurance Corporation of India, holding 25.3% stake, State Bank of India with 6.42% stake, Japan's Oryx Corp holding 23%, and the Abu Dhabi Investment Authority with 12%. However, the company defaulted in payment obligations of bank loans, term and short-term deposits, and failed to meet the commercial paper redemption obligations. Succinctly put, with a consolidated debt of around rupees 94,000 crores, the company was simply unable to find resources to pay its debt and found itself in an asset-liability mismatch. More than 60% of the debt owned by the company was in the road building, power and water work projects. Following the defaults, rating agency ICRA downgraded the ratings of its short-term and long-term borrowing programs. The defaults also jeopardized hundreds of investors, banks, and mutual funds associated with IL&FS and sparked panic among equity investors, even as several non-banking financial companies faced turmoil amid a default scare. Such was the ripple effect of IL&FS's default that an entertainment giant like Zee Entertainment Enterprises Limited nearly ran itself into the ground. The IL&FS default resulted in the freezing of already shallow domestic debt markets, even as it sent shockwaves into the financial system in a domino effect. As reported by TFI, Sony and Zee signed a merger deal on Wednesday after the latter's debt as of March 2021 stood at rupees 3.17 billion. Zee was among the most profitable and professionally run companies, However, the investments of the Z Group in the infrastructure market went truly south due to collapse of IL&FS. The banks tightened lending norms after the collapse of the IL&FS group, and this led to a massive crisis in the NBFC market. As the investment of the Z Group was exposed to NBFCs, it led to a sharp decline in the share prices of the Z Group. Even former chairman Subhash Chandra pointed out the accumulation of debt to the collapse of IL&FS. I had admitted the wrong decisions taken by me in the past which caused the occurrence of the default due to the asset liability mismatch. Goes without saying that it was an after effect of the liquidity crisis triggered by the IL&FS case. Reported extensively by TFI, China's real estate giant Evergrande's dipping fortunes could ultimately affect everything from the jobs market to property prices in the country. This is why Fitch Ratings and Moody's Investors Service seem to have issued warning slogans about the likelihood of a default by the Evergrande Group. Chinese stock markets seem to agree with the larger risk attached to Evergrande Group's default. They fear a contagion effect from Evergrande's debt default hitting the property and banking sectors. This contagion effect has escalated the risks associated with investments in equities. Evergrande, which employs 200,000 people, has a presence in more than 280 cities and claims to indirectly generate 3.8 million Chinese jobs, had been on a reckless buying spree for more than a decade, which appears to have caught up now. Regulators have warned that it is $305 billion of liabilities that could spark broader risks to China's financial system if its debts are not stabilized. While Evergrande is purely a market failure and its market resolution, while it may or may not require Chinese government intervention given its scale, IL&FS was a monster created by India's Nehruvian quasi-socialist past and the red tapeism of the bureaucracy, which came to full effect when the audits in the aftermath of the crisis were found to be botched as well.